the stocks which are doing well, right? Rupee has hit a 5-month high today as well. Bond prices are at 6-month highs. Latha is here with details on what's driving, those two sort of asset classes. Latha, over to you.
Well, the bond markets were very happy with the December inflation number. That's come in at 5.67. The market was sitting at 5.9% expectation. Now, with this, the entire trajectory of the Reserve Bank may dip because the Reserve Bank for October, November, December had an average of 5.6. After the December number, we find the average at 5.37. So substantially below the Reserve Bank's number. And as if that was not enough, there were other sweeteners. For instance, the US PPI number was expected to be plus 0.1 month on month. It came minus 0.1% month on month. So you saw the yields reacting over there as well. In India, again, there was going to be a state loan auction. They were supposed to, according to the calendar, borrow about 21,800 crores. The actual bid amount turned out to be 19,000 thereabouts. So that again was a big relief for the market, especially in that 14-year bond, 14-year paper. And the third big positive, which seems to be running around, carrying along, is the FPI purchases. I mean, we regularly track FPI purchases of equities, but on Friday, what was the debt purchase? $109 million in one day. And it looks like that buying is continuing even today. So for all these reasons, and the FPIs clearly are buying ahead of what will become open from June, the inclusion of Indian bonds in the MSCI indexes, in the JPM indexes, and eventually even in the Bloomberg Barclays indexes. So there is that kind of front running, if you please. So the bond yields have fallen, therefore, to 7.13 early morning, and they fell to levels which we have not seen since July last year. They are not settling there. There is, of course, a lot of short covering as well. But the point is there is a decent amount of FPI buying as well. The rupee market reacted less. At one point in time in the morning, we saw the dollar as cheap as about 82.75 thereabouts, a level which we have not seen probably, since August or September. So that also was a 5-month high, but that was brief. We appear to see a lot of dollar buying coming in from public sector banks, which brokers say is on behalf of the Reserve Bank. Be that as it may, the RBI is now comfortable with 82 point something. Until a few months back, they were defending 83.3. So clearly, it looks like the central bank also has come to terms with the fact that there could be some bit of rupee appreciation given the ferocity of inflows.
Okay, thank you very much, Latha, for explaining that. Amrish Balika is also